talk more about the Greek debt crisis with our next guest. He's John Horner. He's a currency strategist at Deutsche Bank, and he joins us now. So, John, thanks very much for joining us. So why do you think that markets haven't been satisfied with this EU-IMF deal?
I think the key point is that while it's helping resolve some of the temporary liquidity issues, some of the longer-term question marks over solvency and the underlying lack of loss of competitiveness that the southern European nations have had with rising labour costs over recent years relative to their northern European peers aren't really resolved by any of the packages that we've seen so far. That requires significant austerity and wage cutbacks that are going to be politically very difficult to put in place, something that's been reinforced by the protests over the past couple of days. And so the question marks still remain very large, even after the package that was put together over the weekend.
So you're describing investors basically losing confidence in many of these European countries?
Certainly, it's hard to see what the circuit breaker can be in the near term to change around current trends, and given that, it's hard to have any faith in terms of judging when these moves have gone too far. So until there becomes something that will act as a circuit breaker, and the most likely candidate was that package on the weekend, and the markets have clearly voted that that wasn't enough, things are likely to continue to trend in the direction they've been on for some time.
Now, John, we've got the ECB actually meeting in Lisbon. They were all dining last night as Moody's moved to say that it may have to cut Portugal's credit rating again. I wonder, is the ECB going to be considering this nuclear option of buying government debt in secondary markets?
Well, it's certainly an option that will have to be looked at some point. We don't think it's going to be an option they go for tonight. In the near term, to the extent liquidity is short, there's a couple of other options they can do in terms of re-extending term funding, unwinding the sort of, or reversing the liquidity provisions exit program that they had been planning, and just reinstating some of that, potentially swap lines with the Fed, those sort of measures, at least initially. Down the track, though, given the substantial headwinds facing southern Europe and the need for more significant help, buying of bonds is something that will be considered.
Quickly, John, where's the euro headed then?
Given how quickly things have deteriorated, and it's sort of a bit of a chicken and an egg situation as to whether markets are causing the deterioration or things are deteriorating, leading to the market move. But while we've got this feedback loop happening, I'd be loath to pick too many bottoms here. But for the euro, the lows last year underneath 125 certainly appeal as a near-term target. Beyond that, the lows reached in 2008 on a 123 handle will also have some attraction as well.
Thanks, John Horner there from Deutsche Bank.